Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 19th, 2022. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is literally the fuel that keeps this channel going, so please hit the like button. It doesn't take a long time, and it will help this channel out a lot, so more people can see these videos. We're finally getting some action. Junk debt, junk bonds ran into resistance, and I think bears are finally coming out of hibernation. Stocks are following high yield bonds lower for the week, and this is potentially we're rolling over. Maybe we're rolling over into something even bigger than previous two bear markets in our recent memory, 2000 and 2008. Bitcoin, rather dollar, closed above, is pushing towards new highs, and I think gold is headed for a retest of 2021 lows. And Bitcoin bounce was relatively short-lived, and I think we're headed yet lower. If you're a subscriber, then stay tuned for. You can see there's quite a bit of stocks we're going to cover this week because there's just more action this week. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com and click on sign up. I have two products and two packages, trading indicators. I'll show you which indicators they are, and newsletters. And if you're a subscriber, then you will receive these alerts, various alerts for the newsletter through the newsletter. All right, let's get started. So S&P 500. Symbol ES1 exclamation point. These are continuous futures on TradingView.com. So this interface is TradingView.com. If you don't have an account, you can open a free TradingView account and have the same chart basically. Now on this chart you can see this green, blue, red, and yellow lines, which are my indicators, trading indicators. What they do, what they show is they show really convenient levels where you can make a decision, a trading decision, whether to go long, in other words buy, to go short, in other words sell, or do nothing and take profits, etc. So all the information about stock markets is basically distilled into those four lines. Looking at this chart, this is S&P 500 on daily time frame. Where I'm hovering, it says 1 day, and it says D right there where I'm hovering. So what it means is, excuse me, what it means is each candlestick, this red or green candlesticks looking sticks thingies, is a day's worth of activity. So what happened today, for example, is we had a big red relatively big red candlestick. So this is following a very sizable rally of the June 16-17 lows here. For now, it is still considered a bear market rally. So what does that mean? Bear market meaning that we are in a downtrend. S&P 500 is in a downtrend, and this rally is during that downtrend. According to my system, the bear market started right there where I'm hovering on April 29th, 2022 this year, when the price closed below this yellow support resistance line where I'm hovering. Basically, this is all I needed to know about the S&P 500. I don't really need to know anything about, earnings or price to earnings or world situation, etc. So it's a very simple definition. Definition is when, before, for example, here back in beginning of this year, we were still in an uptrend and we were kind of struggling here without making new highs. Finally, we broke down in April of this year and closed below this yellow support resistance line. This is a signal for me that we're now in a bear market. So we had a small bear market rally right there. It began on 20th of May, was the bottom of 20th of May, and it ended exactly at the red support resistance line right there, where it says short signals, and then if you were able to open a short position, then you had a nice gain. Now we had a relatively big rally from the lows again that we made in June here. Now we seem to be topping out. Now I'll get to the junk debt in a second, but for now I just wanted to show you the way we think, the way we use my indicators is once there is a close, when we're in the downtrend or when we're in a bear market, once there is a high or a close above the red support resistance line where I'm hovering, and then when we close again below it, so something like what we had here on the 31st of May and then again on the 3rd of June, with a high above the red line and a close below it. So this was a signal for us. Same thing, we're having, we're at now closed above the red line, and then we're waiting for a close below it. So I think if we close below this red line, which is currently at 4077, I think it's game over, and these lows may not hold, the lows from the June. I think we will continue significantly lower, possibly making 2008 or 2000 year 2000 bear markets looking similar to those bear markets basically. So we're waiting right now what's going to happen. So bull market or uptrend, if we close above 4369 or 4370 basically, I think we're going to enter a bull market. And again, once again, I'll show you junk debt in a second. I'll show you the reason why I think that we're actually going to roll over. I think the stocks will be rolling over. Here is Dow Jones futures, and look at the way this action is. I'm going to zoom in. Notice what happened on the 16th of August. We touched this blue support resistance line again. On the 17th of August we touched it. However, we failed to close above it. So right this instant again we're still thinking that we're in a downtrend. A downtrend for Dow Jones began about the same in April. Had several opportunities to sell short. Now we had a tremendous bear market rally. Now anything is possible still. But the way things are looking, it's quite likely we're going to roll over to the downside. And also, I don't really use Dow Jones that much. I use mostly S&P as my go-to index, basically. Very similar situation with NASDAQ, but NASDAQ is weaker than the S&P or the Dow Jones. So actually bear market for NASDAQ started even earlier right there in March of this year. And again, notice very big rally here into late March, early April. Almost came to this blue support resistance line, almost touched it even, but then rolled over, had a beautiful short signal right there on the 8th of April, kind of collapsed towards June lows, and then again together with the rest of the market had a rally. So actually NASDAQ already gave us a short signal right there on the 8th of August. So we're again approaching this red support resistance line, which is currently at 13205. I think if we close below it, we most likely will at least retest this yellow line, but possibly even lower. Possibly will break this lows from the June of this year. So bears are coming out of hibernation, especially today's candlestick looks quite bearish. Here's the Russell 2000 small caps index, even weaker. Weakness was pronounced as early as January of this year. Russell 2000 entered the bear market right there in January of this year. Had several opportunities to sell short. The latest one here in April. Also made a new low. Actually, even it broke below previous. So, for example, if NASDAQ, let me rephrase it. Yeah, so we basically made a June low for Russell 2000 and then rally. So again, Russell 2000 also is giving us a short signal, as already it gave us a short signal, so we are thinking about selling it short. I might actually open myself a position if we close below this red support resistance line, but the signal is already there. So stocks are definitely rolling over, or seem to be at least rolling over, so we will take it at face value and trade the chart in front of us. Here is junk, JNK, symbol JNK, and notice these are unadjusted prices. To adjust the prices for dividends, because JNK actually has a lot of dividends that they pay out. So to adjust for dividends, you need to click this button right there, adjust, and you can have adjusted prices. So notice where the red line is right now, and if I unclick unadjusted, you can see it touched the price touched the red line right there on 11th of August, and those are short signals. Today we made a lower low below this 28th of July low. So in generally speaking, this is great news for bears. Why? If we look on weekly chart for junk debt, here is correlation coefficient in the lower pane here. This is correlation to the S&P 500. Notice that correlation is generally very positive, and this means that whatever junk that does, S&P 500 usually does the same thing. So we're taking the signal for junk debt again at face value. Notice again, there's the rally of the lows towards the red line, and then a big red candle this week. It's somewhat oversold, so we might kind of bounce up and down a little bit, but I think the direction is down. So I think that we will potentially see even lower lows for high yield bonds, and this is really bad for stocks, again because of the correlations. Moving on to the dollar, here's DXY dollar index, again on a daily charts. So we made a new high. This is a 20+ year high on 14th of July here. We kind of pulled back, and I thought maybe we tapped out. Maybe this is the end of it. You can look on the weekly chart. So there's that high from the 11th of July. And no, apparently it's not, because today we actually closed at new high, and this is a new 20+ year closing high. Additionally, it's a weekly basis, on weekly basis. So I think we will take out this high and continue higher. So what this means is basically when we trade currencies, as for example euro versus US dollar, we trade it in currency pairs. DXY is a currency index, but if we trade it as currency pairs, here's a weekly time frame of euro versus US dollar. It just means that the euro is collapsing versus US dollar. So we're each euro is a dollar, which is quite unlikely. It hasn't been, hasn't happened in a long time. This is below 2015 lows. We have to go back all the way to 2003 to see the same price levels. So this is not a good news for euro. It's great news for the dollar. It's also bad news for gold, because gold is traded in dollars, XAU divided by USD. So right now we're seeing gold approach this yellow support resistance line. Okay, I'm gonna zoom in right there. It landed literally on it this Friday today, and we could break this and continue lower to new lows. So this low right there from 21st of July, was a relatively weak bounce. Didn't even get to the resistance, which was at 1827, and actually kind of rolled over. Gold is currently in a downtrend. We were shorting it. I personally shorted it right there on June 30th. Made a little bit of money here. Right now, again, not really much we could do. We just wait and see. But I think we could break below this lows. We can look on the weekly chart for gold. So this one is annotated. You can see we had lows from March 2021, August 2021, and now we had another low at around on July of this year. Notice we're kind of around the same area, about 1670, 1680 for gold. Again, if dollar continues higher, gold will break the support and continue lower. How low can it go? Well, there's okay support at 1455, but I think a better support would be around, somewhere between 1100 and 1300, somewhere in this area. And to wrap it up, we're looking at Bitcoin right now. So Bitcoin is in a downtrend, there's no question about it. It started its downtrend right there in January of this year. I'm gonna go to weekly charts, it's easier to see. So there is the beginning of a downtrend on the 3rd of January of this year. This is a weekly chart, so each candlestick is a week's worth of activity. Had several opportunities to sell short. Latest one was just enormous. In April of this year, it completely collapsed. It was close to 60% gain. Technically, you should still have this position open because your stop is at the red line. I mean, people, depending on where you entered, you will have different stops. But I think the way this candle looks right now, it just looks terrible. I think we can see new lows. I think we can break below this June low at 17,500 or so. And I think if it breaks below that, I don't know, 0 sounds good, minus 10,000 sounds pretty good too, but I mean reasonably I think 10,000 is very possible, so another 50%, which is insane, right? If you're a Bitcoin or whatever bull, that's 50%. You can barely see it. And what if it goes, that much? It will go negative. Can it go negative? Make a comment. What do you think? If you have any questions, any comments, make a comment. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. So I have, again, trading indicators. These are the lines that will basically help you trade pretty much any security I can explain, and there are tutorials available on how to trade using my indicators. Once you sign up, I'll send them to you. If you want just a newsletter, so I send out daily newsletter and a weekly additional newsletter to my subscribers. This week there's quite a bit of stocks. You can see there's many stocks that we're going to be covering this week. So if you want to sign up now, that's a great idea. Best thing is to get both trading indicators and the newsletters, and that's the best deal at $60 per month. I think it's a very good deal. Again, if you need a personal one-on-one help, then you can also sign up for VIP access, and that's 60 minutes per month, one-on-one access via the Zoom screen share. Right, that's it for this week's recap. Again, please don't forget to hit the like button. This is exactly what keeps this channel going. Subscribe to this channel also, and if you have any of the accounts like Twitter, Facebook, etc., then share the link to this video so more people can see this video and use the knowledge that I'm sharing. That's it for this week's recap. Thank you for watching and have another great trading week. Bye bye.